You know, there's a lot of upward momentum with the real estate market going on right now. A lot of people taking advantage of that and entering into really a wealthy part of their life, asset-wise. So they're selling their home, they're introduced to a lot of cash, wondering what to do with it, or they're trying to make a big decision on whether they should buy right now. So it made me think, maybe I should sit down with someone who's way smarter than me. So I brought in Adam Phillips. Adam is a CFP, a CFA. You know, I know you're a graduate of USC. You're working on your MBA at UCLA. You must be really torn what color to wear sometimes.
Yeah, I think we just lost about half the audience right there. All the USC fans just stopped watching, but yes.
You work with EP Wealth Advisors. I know that's a very successful local wealth management company. And, you know, people are looking at interest rates today, right?
Mm-hmm, absolutely.
They're low. They went down again last week. So what is your long-term projection on interest rates right now?
You know, I think interest rates, I think that's something where just about everyone agrees that the only direction they have to go from here is up. And I think the only area of disagreement, the big question is how far are they going to rise and starting when?
Right.
You know, our view is really that there's no real catalyst for interest rates to rise significantly over the near term. I think if we're looking at the Federal Reserve, they're obviously doing their tapering process. We don't expect them to start raising rates until sometime around this time next year.
Okay.
So one of the things we watch, and we constantly discuss at our weekly investment committee meetings, is our outlook for inflation, because ultimately that's what's going to drive those interest rates.
Right.
And really there's just not a lot of inflation out there and no signs of it. So until we see a lot of wage pressure and general inflationary trends, we're not going to expect a lot of movement on the interest rate. So I'd say the 10-year Treasury right now is about 240. I'd say we're looking to end the year somewhere around 3.25 at the highest.
Gotcha. Okay. So based on that, then, what does EP Wealth Advisor advise clients when it comes to real estate? I mean, how much of their asset allocation should be put into real estate? Do you ever talk to your clients about that? And what is your overall general suggestion?
The majority of our clients do own real estate. We manage a lot of high net worth clients. So they're very established. They have a very diversified investment portfolio. And a lot of them they either own a home or a rental property, or both, or they're looking to sell a home and reinvest the assets. And really our outlook for real estate is we're bullish on real estate. Obviously local real estate is doing tremendously well, as you know.
Right.
Real estate always serves a good purpose. It helps diversify the portfolio, because when you're looking to invest a portfolio, you want an asset allocation with assets that aren't tightly correlated with one another. And so historically, real estate's going to move in a not one-for-one perfectly correlated with the stock markets. Real estate tends to be such a great diversification tool in investment portfolios, is that it's a great inflation hedge. You know, so if you're locking in a mortgage, 30-year mortgage at 4% or just above right now, you don't really have to worry about what inflation's going to do. Inflation will only help you pay that mortgage over time. So it makes a lot of sense to lock those in right now. One of the barriers is obviously getting in the entry point. So as long as they can afford it, it certainly makes sense. I think that they have to understand whether they can take that liquidity or the lack of liquidity that comes with real estate, and that's something that we help them determine if they're on the fence about it. Over the course of financial planning, we help them determine whether it'll hinder their cash flow or not.
Right. I'm running into a lot of situations today where people have owned a property a long time, especially here in the beach cities and Palos Verdes and those areas where they may have acquired the home in the 40s and the 50s for almost nothing, right? And so they come into this influx of sometimes millions of dollars on some of these properties. What is your recommendation for someone to do in regards to that? Because I don't really get involved in a lot of those decisions, but sometimes these questions are asked. So you have independent wealth management firms like yourself. You have the well-known brands that are out there. You have financial planners. I mean, explain, I guess, your company and how you help someone like that.
Sure. Well, one of the things we try to do is look at everything from a holistic point of view. So we're not simply managing the investment portfolio. When we meet with a client and take on a new relationship, we're looking at everything. And so we're looking at those real estate holdings, whether they have that income property or a home that they've held for quite some time. And we're taking all of that into consideration when we're building out a financial plan for them. And so obviously taxes are something that we want to keep in mind. Are they, what is the basis for them considering the home sale? Are they just downsizing, or are they trying to free up that capital? And if that's the what they're really going for, then that's something that we consider as far as the taxes go. I think tax rates are still very favorable, and the exemptions for individuals are still fairly attractive.
Sure.
And obviously, if someone has owned a home for several years or decades, then their basis, although it's low, it's been adjusted for any improvements they've made over that time. So that's something that they definitely need to consider.
Okay.
If they're rolling it into, sometimes they'll look to either gift some of those assets from the proceeds of the real estate home, or they'll look to reinvest if they are downsizing. Some of the things that we help them with are if they want to invest in another single-family residence or an income property.
Right.
To give you an example, if someone's a retiree, then we recommend an income property sometimes so that it'll help them with that cash flow.
Nice.
So it's various things that we look at on a very customized basis.
Well, we always appreciate when you recommend them to buy or sell real estate. That helps us out.
Absolutely.
I think another question I have, just as it relates to making a decision on a company like yours, I mean, forgetting what your company is and your strengths, how does someone go about deciding what type of firm to go to, what type of company to go to, if they're choosing a new advisor or some financial help?
I think at the end of the day, there are many options out there, and it comes down to what does that prospective client feel comfortable with. And at the end of the day, they really need that peace of mind knowing that they've chosen the right advisor. One of the things that we like to rely upon is the fact that our advisors are with them from beginning to end, and so they have someone that they can call directly, as opposed to some of the larger institutions where you have to go through a customer service 800 number, things like that. So it's very customized, relationship oriented, and I think that's important, and so it ultimately will depend on the needs of the client, though.
Great. Well, Adam, we appreciate your insights into this market, and look forward to working with you in the future as well. Excellent advice. We appreciate it. Appreciate your time today. We're checking out. Again, it's Ed Kaminsky. We're at Shorewood Realtors at the Kaminsky Real Estate Group. Thanks for listening, and we'll talk to you soon.